You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VOLQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of vol? Well, let's find out together, shall we? Because it is time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-engaging, ever-insightful Options Insider Radio Network. Reminding you, if you like what you hear, do keep rating and reviewing on your platform of choice. It does help the new folks discover the show. I've been running for a while, over 10 years on this very program here, but new folks learning about vol, learning about the shows all the time. So if you do like what you hear, do keep rating and reviewing. And of course, if you don't want your broadcast week to end with volatility views, you want more content in your life. And who can blame you? These markets are wild. They are crazy. They are unpredictable. Then theoptionsinsider.com/pro is the place to go to get all your questions answered. Great pro Q&A sessions. Our old friend, the Viceroy, Mr. Alex Jacobson himself, joining us in the hot seat this week. That was a fun one. I haven't talked to him in nearly a year, so it was fun to get his thoughts on all the madness engulfing the markets right now. You can check that out. He put out a clip on social media, so you can get a little taste of it. If you want to hear the full thing, of course, theoptionsinsider.com/pro. That'll also get you live access to this, every other show that we do. The nearly 200 archived episodes of shows on the Pro Podcast feed. The giveaways, man, it's hard to believe we're already coming up on the March box soon. We're giving away a lot of great stuff to you folks. You guys want to get access to that, theoptionsinsider.com/pro is the place to go to learn more. And let's learn who's joining us on the old Volatility Views show today. First, let's go out to a quiet, a sleepy, some might say a tranquil volatility mecca known as Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show. How goes your volatility baking?
It's going to a great day. I've got one cake out of the oven. I got a second cake that's going to be done in about 4 minutes. making some red velvet for my wife's birthday tomorrow.
You're making multiple cakes.
Well, because I don't know if you've seen this Netflix show, Is It Cake? But Valentino loves it. So we're going to try and make an Is It Cake where it like looks like something else. And so I have to make multiple cakes. But yes, folks, what I'm looking at is a market that has been all over the board today. We've been up, we've been down 30 or 40 bucks. And vol has been pretty juicy the last few days, last few weeks. And so there's just, I think a lot to do and a lot to trade over the last couple of days. I think the rest of the day could be pretty fun.
Could be a fun day. We got a fun show in store for us because we're also joined holding down the NASDAQ hot seat today by Mr. Kevin Davitt, the head of NASDAQ Index Options Content. Kevin, welcome back to Volatility Views. Sir, the streak is alive.
The streak remains intact, but I felt good like a week ago from making a stir fry, and now Mark is over here baking like shaped cakes, so sort of feels inferior now with respect to more important issues. When I think about this week, it's another week where a lot went down. We had another Fed meeting, but I continue to view the landscape as a trading friendly market, and I would be much more apprehensive from a big picture investing perspective. And I suppose that serves the messaging here because I imagine the audience is looking for opportunistic ideas, and I think the market is probably going to be full of them in the coming weeks.
Full of a lot of things, including full of a lot of show in front of us, listeners. So let's get to it. A little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show we do just that. We break down the week that was, and indeed still is, from a vol trading and trending and analysis and unusual activity, all sorts of fun perspectives. And as the Meatball alluded to, it's a bit of a topsy-turvy one out there yet again today, and this is not anything that will surprise longtime listeners or even newer listeners of the show or indeed the network. We're seeing a little bit of turbulence out there in the market today. We started off in the red. Things were looking down, then they tried to rally it in the S&P, then they sold it off again. Now they're trying to rally it again. We did briefly flirt with, actually, we were mixed early in the session, red early in the session. Then we actually, right before showtime, we were looking green. And now it looks like we're kind of giving some of that back again, but only slightly. Most of the major indices, right as we kicked off the show, off ever so slightly. S&P off about almost 0.1%. Dow off about 0.05%. So close to unched. The only thing that was firmly in the red was the NASDAQ off nearly 0.5% when we commenced operations. But of course, you don't like that. Just wait 5 minutes out there, and I'm sure you'll have something else on your screen waiting for you. That means when we kicked off the show, we had VIX cash right around a 23 even, listeners. That was down almost 2 points, about 1.9 points from where it was this time last week. VVIX itself taking a bit of a hiatus this week. Still frothy, 105, nothing to sneeze at, but down about 17 points. Vol has really been whipping all over the place of late. That's certainly been an indicator to watch out there over the last few weeks. Up 25 points, down 17. I mean, whipping all over the place these days. VOLQ, a.k.a. the at-the-money vol of the NASDAQ 100. No skew here, ma'am. Just the facts, just the vol. 24.70, down about exactly a point from where it was this time last week. So a lot to unpack there. Let's go around the horn the opposite of the way we started. Let's go out to the old NASDAQ hot seat first. Kevin, obviously a tumultuous week. It always is whenever Powell and company get on the microphone. What was catching your eye out there from a vol perspective this week, sir?
Yeah, you're right. Whenever Powell and crew have meetings, there tends to be some volatility, and we saw that this week. just sort of recapping some of the key items as far as my hot seat's concerned. Last weekend, you had the sort of forced marriage between UBS and Credit Suisse, and that's sort of how we started the trading week. You have continued concerns about the potential for contagion. I feel like, Mark, Longo, we have now been talking about that term for 5 or 6 weeks.
I think we coined it. I think we coined it here on the show. It's our fault.
Whoever is getting cited for that, it continues. And when I look at some of the regional banking indexes this week, they are making new lows, and that gives me some concern from a big picture standpoint. Middle of the week, you had the Fed talk about the pressure that's been building in the system, the tighter financial conditions around this crisis / not a crisis. They hiked 25 basis points, and the divergence between what the Fed, at least in their words, expects out toward the end of the year and what the Fed Fund Futures is currently pricing, there is a chasm there. The market, the Fed Fund Futures market, is expecting cuts, and cuts fairly soon. Powell is not giving that credence thus far. I tend to think that the bond futures market is more right there, but time will tell. The close on Wednesday, which was Fed Day, was a little bit sloppy. After Yellen made some comments about blanket FDIC insurance, and like you mentioned, you have VIX in a little bit for the week, VVIX, and I look at SKU, which has come off a bit this week as well. But I think big picture, or sort of intermediate picture, we continue to see range-bound markets. If you're referencing the S&Ps, something like 4,100 and 3,900. And on the NDX, where I focus most of my attention, something like 13,000 and 12,000.
Yeah, a lot to unpack there. Of course, you're right. We had Powell and company doing their 2-day dance earlier this week. Coming out, a lot of people were maybe hoping for no cut. I think the smarter money was on a quarter point. That, of course, turned out to be the case. Powell saying, we're probably going to not go too crazy for the rest of the year, maybe one more. So maybe talking things back a little bit, maybe sounding a little more conciliatory than he has in the past. So once they announced their decision, the markets were actually rallying. We were looking good. Then Yellen said, hey, hold my beer, kid. Forget about that blanket FDIC. And it really just spooked the hell out of everybody. And so, of course, we ended that day with a wipeout. We've been kind of struggling ever since throughout the week. We rally, we sell off. We rally, we sell off. So a lot of vol to be had, a lot of analysis to be done here. Let's go out to the baking capital of the world. Who knew Austin once again? Volatility and baking. A lot going on out there in Austin. Sir, if you can rip yourself away from your red velvet, what's catching your eye from a vol perspective this week, sir?
Yeah, VIX has been much stronger than the actual market movement. So they're kind of lining up for the potential of some sort of big blowout. That's the part I think is really eyebrow raising over the last week, is we've seen VIX, VOLQ, the vol of vol really, really get juiced. And that has been kind of the big driver of the market. With the 9-day VIX has had just some incredible range over the last few days. And again, driven by this bank fear, but seems to be coming off a little bit. Mark, I know we don't normally talk about individual equities, but I found it a little eyebrow raising that yesterday, before this Deutsche Bank thing blew up, they bought 60,000 of the April 9 puts. Pretty timely trade, I have to say.
Yeah, we've been talking about puts in Deutsche Bank, it seems like, for a long time, going back over a year. But yeah, of late, there do certainly seem to have been a few more in the old back pocket. Well,
it was a very timely trade in that they paid 60 cents for about 60,000 of them, and this morning they were up over 100%. Interesting, they've only sold about 10,000 of them.
Are you alleging
Yes.
Are you alleging skullduggery in the world of options, sir?
I would never ever suggest.
I'm shocked.
That there could be
I'm appalled. I'm appalled that you even make such an allegation.
There's no cheaters in options.
There's no cheaters. Never in a million years would such madness unfold out there. Deutsche Bank hanging out 9.25. What puts do they buy, Mr. Meatball?
The April 9s.
There you go.
9s.
Good strike selection out
60 cents. For 60 cents. It's a good trade.
I'm guessing they're looking a little better today. Just going out on a limb. Just throwing that out there.
Yeah. They had an opportunity to sell them for 100% this morning. They're still up about 70% right now as we're talking. So it's a pretty darn good trade.
Good for those well-timed fellows out there. We tip our cap to them and their savvy market analysis. All right, let's keep on rolling out there into the land of the volatility surface. What is popping off out there this week? And the overall level of the curve is relatively similar to where it was this time last week, roughly a half a point, plus or minus where we were this time last week. So not a huge evolution across the whole curve. Of course, we saw March go the way of the dodo, so March is off the board now. We got April slotting into that front pole position there, leading the dance. It's off almost a full point this week, about 0.9 in terms of the April future. May, right behind it, down about half a point. Kevin, anything catching your eye out there in the volatility surface this week?
Well, we spoke briefly about the April-May spread last week, which I believe a week ago, that month 2 at the time, month 3 spread was slightly inverted. And you see the front 1, 2, 3, 4 months of the curve in a fairly normal carry market or contango, and then flat in the mid and longer term futures. We don't see quite the level of flatness that we saw for most of last week. That's fairly typical when you see that front month future come off. As far as looking forward, so I'll often take a look at where 30-day implieds are trading on index products, and then what that implies in terms of daily moves. So last I looked, 30-day at the money S&P vols were trading around a 21 vol. That implies 1.3% daily close over close moves. We've had average true ranges. Now that is not a close over close number. It's high, low relative to your spot of 1.6%. So if you are able to scalp gamma in this market, it seems like a possibility. When I flip my attention to the NASDAQ 100, 30-day at the money vols are trading just below 25%, and you have seen average true ranges very close to 2% on the NASDAQ 100. So going back to my original point, I continue to see a trading-friendly market. And quite frankly, that is what I think we like, and probably most of your audience likes. There are opportunistic situations here, and I think if you're able to be thoughtful and time some of them well, whether it's Deutsche Bank or index premium, there's going to continue to be an opportunity there.
Let's put it out to them. You folks, you guys and gals listening live, you like this? You like this kind of market? It certainly is giving you a lot of opportunities to sling a little bit of vol out there. So I'm curious. Hit us up if you're having a good time. Mr. Meatball, he's always having a good time, no matter what the market is, because if the market's boring, he's baking red velvet. Mr. Meatball, sir, what's catching your eye out there in the vol surface this week, sir?
Yeah, I mean, we've seen the curve go from contango to backwardation to super flat. Right now, I was looking this morning and every single future was just sitting on top of itself. Now things have come off a little bit. We've gone into a little bit of a contango, but all in all, curve very flat. They're pricing in a lot of risk to the market right now, and that is again pretty indicative of what we're seeing in the overall market. The curve itself really flying around up and down. We also had March expiration, which happened to coincide with some interesting selling. And so, yeah, it was a week of fireworks and the curve moving around a bunch.
Fireworks indeed. Always can expect some explosives when Powell and company get together out there. Let's keep on rolling. Let's look into the land of the vol options. And, it's been a pretty hot and heavy week for VIX, as evidenced by the ADV. It was starting to drift back down towards 800,000. Now back up. It's up to about almost 850, 848,000. That's up about 30,000 from where it was this time last week. So Obviously, VIX has been putting up some numbers, which you would expect in a Fed week. That's usually when you could expect some numbers. Today, actually looking kind of modest, 371,000 on the tape. So, again, if we were back where we were about a month and change ago, the ADV was right around 500,000. 371 would be blowing the doors off. But in these kind of boom times where we're seeing 1 million plus days sometimes out there in VIX land, 371 is actually kind of quiet. Then again, we'll see. Whipsaws tend to generate some paper sometimes, and we are kind of whipsawing out there in the S&P right now. So we'll see what we get up to even maybe by the end of the show. Let's go out now to the top positions. Let's see what's open for size out there in VIX options this week. Still hanging out at the same relative overall allocation, 8 calls to 2 puts in the top 10, so no shakeup there. Number 10, it cost you 138,000 contracts to break into the top 10 this week. That's respectable for VIX. That gets you to the May 30s. Number 9, 143,000 of the April 19 puts, so our first of 2 puts here on the list. Coming in at number 9. Number 8, $1.53 of the April 40s. Number 7, 162,000 of the July 60s, so an intriguing strike out there. And month. Number 6, $1.65 of the April 21 puts. So there's our second of 2 puts on the list this week. Number 5, 179,000 of the April 35s. Number 4, 221,000 of the May 50s. Our old friend, is it 50 cents? If so, what is he waiting for out there? When's the moment where he's going to pull the trigger? Always a fascinating thing to watch. Number 3, 268,000 of the April 30 calls. Number 2, 415,000 of the June 40s. And, number 1, 423,000 of the June 30s. Everybody's talking about that June 30, 40. We had Jim Carroll on last week. He was talking about it. He's been tweeting about it. Of course, our buddy, Mr. Rhodes. So I'm pleased to say I talked to him this week. I'm pleased to say he is recovering nicely from his, shall we say, misguided attempt to ride a scooter. It didn't end well for him. Thankfully, it ended better than it could have than the alternatives, but I think he's done with his scooter days are now behind him, thankfully. So we'll hopefully have him back on the show again once he's all rested up out there and his brain is back to normal functioning capacity. But his favorite trade, the June 30-40 out there, still topping the list, right around 400,000+ contracts each. So a size position, interesting one. By the way, if you were part of our pro Q&A, you listened to the question we had to kick off the year, I believe, with Russell, someone asking about how he would plan for and trade against a potential pop in VIX over the next 6 months. Well, he's really gotten the bit in the teeth with that and run with it. He's been writing a ton of blogs and articles and making the actual trades and updating them with rolls and adjustments. I started off pretty much his bullish risk reversal idea, and he's kind of rolled it and adjusted it from there. So if you are intrigued, if you're on the pro, I should have checked that one out. And even if you're not on the pro, you could check out Russell's Substack, I believe he's posted there, just his blog. Follow him on Twitter at Russell Rhodes. He's been posting a lot of updates, including one just this week. I think he rolled it again. So it's been interesting to watch how he's approaching this potential pop in VIX over the next 6 months. So stay tuned to that if you haven't been doing so already. All right, out to the paper out there today. Like we said, 371,000 contracts on the tape today. So not the most rock'em sock'em of days. The big dog, though, the April 30s, 31,000 of those, followed by 26,000 for number 2 of the April 21 puts. Number 3, 14,000 of the April 19 puts. Number 4, 13,000 of the April 28 calls. And rounding out the top 5 on a, I guess you can say, decently active day, but not blowing the doors off, 12,500 of the April 20 puts. Out to yesterday, a little bit more paper on the tape, but not a heck of a lot more. 535,000, so not even making the ADV yesterday. The big dog yesterday, 33,000 of the April 30s, so 2 days in a row, the 30 strike, leading the dance. That's kind of interesting. Right behind it, 30,000 for number 2 of the June 60s. We're just talking about the July 60s in our top 10, but the June 60s lighting it up yesterday. Number 3, 28,000 of the April 21 puts. Number 4, 24,000 of the April 22 puts. And rounding out the top 5, yesterday, 23,000 of the April 24s. Out to Wednesday, a little bit more paper on the tape, 927,000 contracts to be precise. Once again, the April 30s, 3 days in a row, we got the April 30s leading the dance. That can't be a coincidence, listeners, as we have seen them holding down the number 3 spot in our overall top 10. So obviously a lot of interest in that April 30 strike right now, including on Wednesday, 54,000 of them going up there, followed by 54,000 as well of the April 25. So I think I smell a bit of a roll or a vertical. Number 3, 40,000 of the April 19 puts. Number 4, 32,000 of the April 18 puts. And rounding out the top 5 on a pretty active Wednesday, 26,000 of the April 28 calls. Then we get to Tuesday. That was the banger of the week, 1.24 million contracts. Of course, Tuesday kicking off the Fed meeting, Wednesday concluding it. So that's always going to drive some paper. 1.24 million on Tuesday. The big dog on Tuesday, 114,000 of the April 21 puts. So close to a third of the paper we've seen in its entirety today going up on Tuesday morning, just in the the March 21 puts, followed by 93,000 for number 2 of the March 22 puts. Number 3, 55,000 of the April 21 puts. Number 4, 53,000 of the March 26s. And rounding out the top 5 on a pretty banger Tuesday, 50,000 of the April 20 puts. Monday, not wanting to be outdone, came within a hair's breadth of beating Tuesday. We had 1.24 million contracts on Tuesday, 1.21 million contracts on Monday. So Monday, no slouch either. The big dogs on Monday, 120,000 of the April 30s, followed by 101,000 of the April 35. So once again, the April 30s leading the dance. That's clearly our trade of the week out there, followed by number 3, 69,000 of the March 25s. Number 4, 52,000 of the March 30s. And rounding out the top 5 on a pretty active Monday, 44,000 of the March 26 calls. Mr. Meatball, sir, we shall start with you. What was catching your eye out there this week? And what are your thoughts on this tsunami of interest here in the April 30 strike in particular?
Yeah, we saw a big lot of 30-35 call spreads go up. I believe that was mostly on Tuesday. What was interesting is we had kind of this ball blow up on Monday, and they were just buying puts. Then we got follow through. Then they decided to buy calls. It was, the timing of you actually should have gone the other way around, because Tuesday was really the peak for VIX. And so the paper has been, Monday and Tuesday were super, super active. Things a little slower the rest of the week, but those first 2 days, things were rocking and rolling in the VIX pit.
All right. And Mr. Kevin, I know you're not watching day to day the flow out there in VIX, but I'm sure you have some thoughts on the overall trends we're seeing out there in the vol options this week, sir.
Yeah, I of course do from an exchange perspective, and pleased to see SIBO continue to do well with the product. There's obviously utility there. I this week was reminded of the fact that we are 3 years and 1 day removed from the pandemic lows. So as I'm wont to do in situations like that, I look at how different indices have performed over that time frame. Pleased to see, like so many other time windows, that the NASDAQ 100 has outperformed the other U.S. majors. I don't think that that's a huge surprise. World is very different now than it was 3 years ago when rate cuts and stimmies were the talk. Now we do have, though, when you look further out, there is the prospect of rate cuts in the future. And there is the potential knock-on effect that tends to benefit information technology names. And then when I look at an index like the Russell 2000, small cap tend to be more levered, and the financials are fairly well represented in the Russell 2000. It's something like 18% of the index. And then I think about the S&Ps, where financials don't play quite the same role, but they are significant. And then I think about some of these regional banking indices and the fact that the NASDAQ 100 does not include financials. And, I am certainly talking my book here, but looking ahead, that sort of construct is in large part why the index has outperformed over a 3-year time frame, over a much longer time frame, over some shorter time frames. And I think it will be very interesting to see how it plays out. Q1 markedly in favor of the NASDAQ 100, whether we see that for the rest of this calendar year.
Yeah, Kevin, I did think it was kind of interesting that, Apple, Microsoft, and Google almost seemed like, and this turning things on their head, it was like a flight to safety. So let's buy Apple, and let's buy Microsoft, and let's buy, Google. Whereas you would have never, and they're not jumping into Coca-Cola. They're not jumping into Procter and Gamble. It's really interesting the way that the thought of flight to safety has changed over the last year or so. It feels like.
You're absolutely right. I think big picture there, you can look at balance sheets and massive, massive cash balances at those types of firms. That's likely not the case at many small caps. And you can see on the financial side how quickly an asset base can be wiped out when a couple of weeks ago you have 2 years yielding over 5%. And now that's down to like 3.6%. What a move in rates. And the fact that some of the mega cap tech names are perceived flight to safety vehicles now is fascinating. What a world.
Well, you joke about the big tech being flight to quality. We were joking, only really half joking, on our crypto show earlier this week. Is crypto the new flight to quality, given the way that asset's been performing over the last few weeks? And we put it out to our audience, and they were kind of split. It was roughly 50-50 on whether crypto is a new flight to quality asset. So if you're surprised at the flight to quality of Microsoft, I raise you one with Bitcoin and Ether out there. Put that in your pipe.
I don't get that one. I do not understand that one.
It's been popping hard of late, so some folks are certainly piling into crypto out there these days. Let's see if you folks are piling into the rest of the vol products out there. Let's get on out to our inverse friend first, SVIX. And this one, as you might expect, been whipping all over the place today. It's been down, it's been up, it's been down, it's been up. As of right now, it's hanging out at about 14.5. That puts it up about half a point from this time last show. Not a ton of paper on the tape, 530, even though the ADV is starting to look a little more respectable out there. It's up to about almost 1,600. It's up a couple of hundred this week. So the ADV is moving in the right direction. And as I said, I've been able to get some trades off out there. So perhaps more than you would expect given this somewhat light ADV, and certainly more than you would expect when you look at the very scary options chain. You look at that and you think, I'm not doing anything out here. This is ridiculous. But seems like some folks are willing to step up and maybe meet you if you're willing to put some orders out there. So if you are intrigued by SVIX, but maybe a little intimidated by it, it's worth maybe dipping a few hooks in the water, see if you get some nibbles out there. In terms of top positions, we'll do we'll do a top 5. There's not much out here. I also want to make sure I get to some of your vol questions this week. Number 5, we've got 500 of the June 8 puts. Number 4, 500 as well of the June 13s. Number 3, about 600 of the Jan 10 puts. Number 2, about 1,000 of the June 11 puts. And the big dog out there in SVIX, we were talking about these a few weeks ago on the show, the SEP 35s. That'd be an interesting environment. Where would we have to be in VIX land to make the 35s even remotely relevant? Obviously, you don't have to get all the way up to 35 to make these things sing, listeners. That's been our whole conversation about garbage VIX calls and garbage SPY puts. Maybe the SEP 35s can fall into the garbage SVIX camp, but either way, an intriguing position out there. In terms of paper, not a ton, like we said, lighting it up out there. Mr. Meatball, I know you were a big fan. I think there were the 17s a few weeks ago. Those kind of worked out for you. Are you equally excited about the SEP 35s? And what else is catching your eye out there at SVIX this week, sir?
I am not as excited about the 35s. I still like my 15s played out pretty well. Bought them for $1, sold them at $1.75. I'll reload when it gets back down to 14. I'll buy more of those. I don't know about the 35s. That's pretty aspirational, Mark. I got to be honest.
That might be our
aspirational.
That might be our new garbage. The pars are the garbage VIX calls. The 35s, maybe those are the garbage SVIX calls.
Maybe, or who knows? Maybe Vol's going to collapse and that trader is going to look like a genius.
Yeah, if Vol gets down to our theoretical low of 5 out there in VIX land, these calls are going to be singing.
Exactly.
Outside of that scenario, I'm not too sure. Intriguing stuff nonetheless. Kevin, I know you're a huge fan of these SEP 35s. Tell us why you bought all these, and then B, what else is catching your eye in the inverse lands?
What's not to like about any SEP 35? I'm just kidding. I have no opinion on those particular options, but I would like to kind of fluff a guest that we had on a couple weeks ago, Vance Harwood, who, from my perspective, covers the volatility related ETPs really well, putting out some content about the upcoming reverse split in UVXY and the potential for a reverse split in VIXY. When I'm looking for information on what's going on in this little corner of the vol market, I go to him. And so I just figured I'd reiterate my appreciation there.
Intriguing. Get to all that fun in a second out there in good old UVXY. First, let's go to UVIX. Its competitor out there these days. UVIX, as you might imagine, also swinging around a lot today. As of a few minutes ago, hanging out right around 21. That puts it down about 3 points from where it was this time last week. Doing a little bit of paper out there today, about 5,000 contracts on the tape in UVIX. The ADV is 7,800, so that's moving in the right direction as well, up about 800, or obviously a little over 10%. So if that can keep growing, I mean, it's still got a long way to go to catch UVXY, but at least it's trending in the right direction. In terms of top positions, we'll just do a top three because there's not a heck of a lot open in UVIX right now. We got 700 for number 3 of the March 25s. I said we're hanging out at a 21 right now. Number 2, about 800 of the end of March, so the 31st, 19 halves. And then rounding out the top spot in UVIX right now, 1,200 of the March, end of March again, 31st, 25. So everybody likes the 25 strike out here in all these products. Intriguing stuff. In terms of what's lighting it up out there today, not a ton. We got a couple hundred of the March 20 calls and the June 16 puts dominating the tape out there today. Mr. Meatball, I think catching your eye out there in the land of UVIX as it slowly crawls its way towards UVXY, sir.
Yeah, that double leverage, it can die very quickly. It moves a lot. It's fun to trade. I wish the options would tighten up a little bit more so that I could fool around in them more. But the stock itself is seeing really good activity. So for instance, now I think it's starting to steal some volume from UVXY. Average daily volume is up to about 16 million shares a day. That is not small anymore, folks. To put things in perspective, UVXY is at about 51 million. But the average volume in UVXY is kind of falling while UVIX is going up. I think UVIX is stealing some volume from these guys.
We shall see. We've been waiting for that for a while. Let's head on out there to your friend UVXY. It's flipping around. It was north of 6 earlier this morning. Now it's 560 as we're talking. Listeners, down about 2/3 of a point from where it was this time last week. Putting up some numbers again today. So UVIX has a long way to go to catch it. 276,000 contracts on the tape right now. That's actually eclipsing the ADV, which is 272,000. It's already beaten that. And that number, 272, that's up 26,000 contracts from this time last week. So UVXY managing to put up some numbers over the past week. Again, it's a Fed week, so you expect some numbers to come flopping in. And Mr. Kevin, just to clarify what you were talking about earlier with Vance, our guest from a few weeks ago, there's no announced split for UVXY. Vance sounds like he's just reading the tea leaves out there.
He is, and he put something out this morning pointing to their last reverse split, which was apparently the tail end of May 21. And this is a quote, historically, ProShares has initiated reverse splits when UVXY has dropped below around $8. I'm estimating based on historical data and market conditions that ProShares will reverse split UVXY 1 for 5 around April 18th. That's the sort of stuff that interests me, and that's why I continue to go back to Twitter despite all the macro nonsense there.
A lot of nonsense to sort through on Twitter, but occasionally you can find a pearl of wisdom out there. That would certainly be nice. I was holding out for a nice, 8 or 10 to 1. We'll take 5 to 1. This hanging out around 5 is for the birds, and it's been doing that for the better part of the last few months. So certainly could use a bit of a shot in the arm, and back to a 25 range would certainly do that. If you're wondering what's lighting it up out there in a very active day out there today, listeners, it's the 6 calls going out today. So Again, no surprise. We were at the 6 strike just a few minutes ago. 32,000 of those trading. 6 puts, 20,000 of those trading. So as we flirt with the 6 strike over and over again, we're seeing a lot of paper flying in there. So said it before, we'll say it again. These products, they can be heartbreakers on expiration day. You're at the strike, you're looking good, and then it moves away from you and wipes you out. So could be one of those days again today, depending on which side of that 6 strike you're lining up on. But intriguing stuff out there nonetheless. In terms of size positions, let's do a top 5 because there certainly is enough to do it out here. Number 5, we got 19,000 of the 5/2 calls going out today. Those were looking better this morning than they are now, so hopefully if you're long those, you got the heck out of Dodge earlier this morning. Number 4, 23,000 of the April 8s. Intriguing. Number 3, 24,000 of the March 4/2s. The puts this time. Number 3, 25,000 of the March 6s. And the number 1 size position in UVXY right now, 26,000 of the March 5 puts. So we're kind of all over the place from an OI and size position perspective, but not surprising to see folks slinging the 6 strike today, fast and furious. Mark, are you down with that? You think we're going to see a reverse split in April for UVXY and anything else catching your eye out there this week, sir?
Yeah, I think we should pretty soon. So, I at some point they're gonna want to. UVXY would have been a lot more interesting the last week or two if they had done it 2 weeks ago, 3 weeks ago when they should have. So I'm hoping they do it soon because UVXY is up 8%, 10%. Oh, it's 38 cents. La-di-da. You just don't have the action there. And I think that's part of what's costing it volume right now is that UVIX has some real teeth and UVXY does not.
Yeah, UVIX certainly stole a march on them, reverse splitting first. I think we could argue their reverse split was maybe not enough, but UVXY doing nothing for the last month when we've been whipping all over the place, and UVXY kind of glued to 5 and bouncing between 5 and 6. Not quite as exciting as it could have been, so it will be nice to see, obviously, a little bit more meat on the bone when this thing reverse splits. Speaking of reverse splitting and more meat on the bone, VXX, a good example of that, listeners, doing a big reverse split just a few weeks ago, hanging out at 51 right now. That puts it down 4 points from this time last week. But how much more exciting is it for all you downside vol traders out there buying puts and put flies and put spreads at a 51 level versus an 18 or a 16? That's just way more exciting out there. So VXX learning that lesson. 34,000 contracts on the tape today, so it seems like it's starting to pan out for them from a volume perspective as well, even though the ADV going in the wrong direction again this week, down about 10,000 to 55,000, but it seems like they're going to meet that, if not beat it today, so maybe they can turn things around out there. Obviously, a lot of you, I understand, have washed your hands of VXX, but I think the reverse split makes it a wee bit more intriguing. Again, I wouldn't put a ton of money in VXX, maybe some fun speculative downside put positions or flies or that sort of thing, because at a moment's notice this thing can go off the rails again without any sort of prompting from the underlying vol market. But as long as you're out there and you're aware of that and you're okay with that, then it can be an intriguing product, I suppose. Let's do a quick top 5 out here. Number 5, 12,000 of the June 80 calls, 8 O's. These are the pre-split adjusted fun ones, so that puts them in an even more interesting perspective. Number 4, 15,000 of the April 41 puts. Number 3, 19,500 of the April 47 puts. Number 2, almost 21,000 of the April 40 puts. And then rounding out the top 5 out there this week, listeners, 31,000 of the April 43 puts. I know, Mark, you said before, and I understand it, you've kind of washed your hands of it. You still watch it, you said, as more of an indicator for what's going on out there from a VIX futures term structure perspective. I'm curious, though, if this reverse split, if this has made it at all more attractive to you, sir.
The VXX, yeah, it has. I've actually traded it the last week. A couple of times.
Oh, look at that. Living proof that reverse splits work.
They do. But yeah, VXX, I've flipped puts a couple of times this week. And I'm looking forward to flipping more puts in the future. And I've set up some longer dated stuff. Now that it's got some teeth, I can get short this and make myself some money.
There you go. Just got to have a nice, I think they went 7 for 1. You got to do a nice reverse split. This 5-to-1 stuff, kind of for the birds. Let's go 7, 8, 10 for 1. then we can have some fun out there. Speaking of fun, we always have fun when you folks join us on the show. So let's do it right now. A little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. No shortage of ways for you folks to get at us at Options on most of the major social media platforms. Questions at theoptionsinsider.com also works if you're on the live. Of course, you can hit us up in the live chat, just like Options Queen. She's saying she enjoys her Friday volatility views. Well, we enjoyed doing it for you out there. She also said, good for that Deutsche Bank trader. Couldn't happen to a nicer person. Yeah, I'm sure you really mean that. Nichols agreeing with us earlier. I asked if you guys like this market. He said, yeah, this is a great market, good for vol traders. I have to agree with you. We are moving all over the place. You're getting some of that vol you love. Whether it's too much of a good thing, that could be debated, I suppose. But you're getting a fair amount of it right now. And Options Queen also agreeing with that. So a lot of fun out there. Also having fun out there with our questions of the week. Getting back to Kevin's point earlier about contagion. We asked you folks this last week. This was our question of the week last week. Everyone has contagion risk on the brain after the meltdowns of some big financial names out there. So we thought we'd put the question to you. Is this a canary in the coal mine of worse systemic problems ahead? Or is it just a tempest in a teapot? And much like the market, our audience was almost evenly split on this. 51% saying yes, 49% saying no. That's uncharacteristic of our audience. Usually they have an opinion and they are not reticent about expressing it. In this case, very evenly split, I suppose, much like the market. We're up, we're down as all these different forces are pushing and pulling out there. So perhaps there's more to this contagion fear than meets the eye. It's intriguing stuff. This week, we're asking you kind of just a fun, straightforward one, inspired by a debate we were having on our Options Bootcamp show a couple of weeks ago. Quite simply, what's your favorite option strategy to leg into stock positions at lower prices? Is it the old ratio 1x2, long 1, short 2 put spread? Is it the plain vanilla short put, or is it something else entirely? Kevin, we'll start with you. First off, are you surprised that our audience is so evenly split on the contagion question? B, going back to your instructor days, do you have a preferred vehicle for getting long some stock using options? And then C, what do you think our audience is voting for?
Oh man, 3 questions. How am I supposed to keep these all straight? Okay.
Trifecta of goodness.
On the first point, I think it's fascinating and understandable that the audience is on the fence, kind of like the market. And I think that speaks to my assumption of the type of people that would like to listen to this type of content, actively involved in the markets. And it does seem like it can turn on a dime. From my personal perspective, my contagion concerns have sort of fallen somewhere in that 50-50 category, and they are inching toward the I'm legitimately concerned about this when I look at measures like European bank credit default swaps making moves and trading at levels we haven't seen since 2011. For your young listeners, 2011 was crazy. And then I look at a move index, which is a forward volatility estimate based on treasury bond volatility. And that continues to chop around 150, near as high as 180 earlier this week. Those are signals that the system is under some strain. And that's why I continue to be focused on short-term opportunities. That's not going to change. With respect to establishing some positions where I'm comfortable owning an equity lower, whatever works for you. If it's an outright short put and you like the vol that you're getting on that and the premium return, have at it. The ratio spreads, I am a big fan of ratio spreads personally. I think they need to be understood. Like if you get a quick move in that direction quickly, what the impact is there, how you can manage it if you choose to turn it into a butterfly. And then, oh man, see, I was rambling. What was part C of this interrogation?
Part C was just, what do you think our audience is voting for?
As far as their preferred way to get long and underlying at lower prices, probably just outright puts, right? I'm willing to own this thing at X level. Let me sell a put down in that neighborhood. That's my guess.
All right. Same questions for you, Mr. Meatball. Are you surprised that our audience was split on the whole contagion thing? And then which way you think our audience is going to get long some stock?
After Kevin's kind of long-winded rant, I've forgotten the full questions.
Tell you what, instead of having you answer those, because we're kind of come up against it, I want to get all these questions in here too. I do see a question in here for you. This looks like he's lurking in our live chat there, Pariah Pants. He has a question for you, Mr. Meatball. He wants to know, where is the best place, he puts in parentheses, free or cheap, to be able to see skew in single names? I want y-axis of the chart to be implied vol and the x-axis to be strike price. He says, the Meatball's book shows examples of this, but I can't find where I can get this information through TD Ameritrade or charting sites. Or Mr. Meatball, he read your book, you lured him to the dark side of looking at skew in single names, and now he wants to know where he can find that kind of data for himself.
Well, the screen grabs are all from LiveVol Pro. So, which costs about $400 a month, but that I happily pay for because it pays for itself with improving my trading. I believe if you have you can get it. I thought you could get it on TD in their charts somewhere, or it maybe under tools. I thought they had something that allowed you to do that, but I don't remember. I don't know. Where can you look at? Does iVolatility have skew that you can pull? Mark,
for single names? I know iVol has a lot of index, so I'm trying to think if they have single name skew data.
I don't know.
Kevin, while he's mulling over, anything you want to add here for our listeners who are looking for single name skew data? You got any resources in your back pocket?
I would say, particularly because I work for an exchange and we deal with all these brokerage groups, that it's arguably inappropriate. But this is a situation where you're incentivized to talk to somebody at your brokerage firm and understand the amazing tools you have in front of you. And chances are somebody there is going to be able to quickly shed light on what you're looking for. And when you're talking to guys that have been in this business for a long time, like all three of us, the tools that you have access to are so amazing relative to where we were 15, 20 years ago. Chances are you're going to be able to find it. It's just there's so many options, and I use that in the general sense, that you're going to need a little help from somebody at TD or wherever your funds are custodized.
Yeah, unfortunately, who is this Pariah Pants? Like Mark, we use a lot of pro tools here as well. LiveVol is a great one for the graphical aspect. I love Trade Alert. Trade Alert is there. Doesn't really do the graphing side that you want, but they have a lot of great data for scanning and for analysis along those lines. Again, both of those are going to cost you a pretty penny per month, so I'm not going to jump out and run out to recommend those for you unless you're really slinging a lot of size and really trying to make trading your go-to main source of income. I'll have to go bang around with TD again and see if they have exactly what you're looking for, these single name skew charts. It's been a few months since I've jumped in there, and last time I was using it, I wasn't looking for single name skew data. I think IB might have something along those lines, so I'll have to go play around with those again. But that is a good specific functionality question. I like when they get these because they inspire me to kind of do another run around through the retail brokerage platforms and see what all the new shiny bells and whistles are. So I'll do a little bit of a deep dive. I'll have some of my compatriots do some as well, and we'll see what we can get back at you with. That is outside of the expensive pro platforms that we normally use. But we're coming up against it. Now it's time for us to keep on rolling, listeners, and get dangerous, get wild. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. And as we're coming to the close of the show, we're pretty much seeing markets not that far away from where we were. Still slightly red. S&P pretty much unched. Dow pretty much same deal. NASDAQ still off, only off about 1/3%. So mostly hanging out pretty close to where we were to start the show, listeners. That means our friend VIX at the top of the show. Where were we? We're at about a 23. We're at about a 23.40 right now. And our old friend, good old VOLQ. There we go. VOLQ at about a 24.5. We were at a 24.70 to kick off the show. So that's come in about 0.2 of a point out there. Actually about 24.55. So off about 0.15 out there. So let's see really quickly, running around the horn. It was myself. It was the Rock Lobster last week. It was Kevin and Jim Carroll. And looking here, let's go to VIX first. I was actually looking decent. I was at 22.75. We're at a 22.40, so 0.35 away. Not quite in the frame of reference. 24.5 on VOLQ. I will take that, though, at a 24.56. That is a bullseye for me, so I will take that. You know, I'm starting to dial it in, Kevin. I said it took a while for me to dial in my models on VOLQ. I think I'm starting to get there now. Andrew last week was at a 22, so no joy for him on VIX. 25 for VOLQ, so he was within half a point. He was respectable. Kevin, you were at a 24.5 on VIX last week, so a couple of points away there, and 26 on VOLQ. Maybe you reverse that on the VIX side to VOLQ. You'd be looking at a bullseye too. And then Jim Carroll, 24.85 on VIX, so he was a bit of a ways away, and 25.25, so about 3/4 of a point away on VOLQ. So a bullseye for me. I will take it. I'll have our producers go through the rest of the listener submissions. Listeners, if you have a winner chicken dinner, they will get back to you with your fabulous prizes. All that a long way around to saying we are go for next week. Since I win, I get to choose. I'm going to choose to go last. So I will choose the meatball to go first. Mr. Meatball, sir, what are you feeling this time next week?
Well, you know, let me look here. I think that maybe things come to a head next week and we peak out in volatility. I think we'll get this banking stuff figured out by then. We're currently 22.46. We're going to top out on Wednesday at 27.72, but we're going to end the week. That'd be this Friday at a 23.32.
Wow, the precision.
The precision.
Wow.
He's just doing his palindromic nonsense.
Priceless.
What do you got for VOLQ as well, sir?
For VOLQ typically runs about 1.5 above the VIX index, or 2 points. So that would have the VOLQ topping out at 29.92 before finally settling in. I think we're going to see NASDAQ vol come potentially be a little more elevated, because as VIX comes off next week, I think you're going to see the triple Q underperform the entire week. So despite, with the spread at about 2 points right now, I actually think it's going to widen to about 2.5. So that is going to put us at 25.52. 25.52 for our VOLQ number.
Mr. Kevin, same question for you, sir. What are you feeling for VIX and VOLQ this time next week?
So part of me wanted a forecast for how well this cake turns out. Perhaps we leave that for next week, but that's information I think we would all like. With respect to my outlook over the next week.
Yes, we also have to know, do you fool your now, 2-year-old son? Does he believe it's cake?
No, well, we're trying to fool the wife.
Oh, the wife. Okay.
Believe it or not, he's 6 now.
Is he 6?
Jesus. That's what pandemics do.
Wow.
Yeah.
Yes.
You age quickly.
Yeah.
All right, so my forecast is not quite as thorough as the greasy meatballs, but what I do see on the horizon unequivocally is an end of quarter. And I'm going to talk my book here a little bit, is that I believe we could see the S&P 500 test 3,800 again. So that's my outlook for end of quarter. I think it could get a little bit sloppy. As a result, My end of quarter, week from now forecast for VIX is 26.5, which is just below where it was last time the S&Ps were around 3,800. That's what that's based on. And I beg to differ with Mark on his S&Ps vis-a-vis NASDAQ 100. I think this continues to be a financial concern primarily, and they're not represented in the NASDAQ 100. I think the NASDAQ 100 continues to outperform, and you could see those two forward vol measures narrower than you typically see. So I went 26.5 on VIX. I'm going 27 on VOLQ. That spread narrowing. Mark, perhaps you and I need a little side wager on the spread between forward vol measures.
It really just depends, because if the banking crisis does come to a head and things cool off, then you're going to see banks really outperform and money come out of the NASDAQ. That's my thinking. Circling back to our whole safe haven thing, remembering that the NASDAQ 100 is really 50% 5 stocks. So if money kind of pulls out of Apple and Microsoft and the Google twins, that would be where I would see some underperformance. I'm not saying they're going to dump it, but I think if the banking crisis clears up, you're going to see a big pop in oil and financials, and you'll see actually an outperformance there. That's kind of my mindset there.
The beauty of a market, right? We can all have our outlooks, express them, and do it creatively using tools like options.
Side wager it is, okay?
He has to bake you a cake if you lose.
Yeah. All right. So loser bakes. All right. The Qs are let's see. Mark, write this down. The Qs are 309.25 right now, and we'll use the diamonds for our alternative. They're 321.20. So write those two numbers down, and I think the diamonds are going to be up in percentage terms more than the triple Q next week.
Oh, I'll take the other side.
All right, done. Loser bakes.
There we go. Bakes, and then it works out a good shipping method for your baked goods to go from across the country there.
I'll get a local bakery, but you'll enjoy it, Mark, and so will your family.
Loser bakes. I like that. Loser bakes. I like it. All right. While they were talking, I've been adjusting my vol prognostication list. I'm getting closer. I was kind of weighing what these two were talking about as well, because we have seen that spread between NASDAQ and VIX kind of tighten up this past week. It got within a point out there. So I was kind of leaning towards a little bit tighter spread between the two of them as well. So I came down on 23.75 for VIX and then about 0.9 away for NASDAQ, about 24.65. So that's your actual correct prognostication for next week, listeners. But I see a lot of you already filing up in the live chat with your prognostications. Get them in if you want to play along, and you too can win fabulous prizes. We're already running long. We got to get out of here, listeners. But before we do, let's go around the horn. Mr. Meatball, sir, if folks want baking tips or vol analysis, where should they go? What should they do?
Oh yeah, well if you want to make money and bake cakes, come to optionpit.com and you can check out my blog. I'm on. I write a blog called The VIX Edge, and it's all about volatility. And volatility trading in S&Ps, the Qs, VIX, VOLQ, everything you would want to know about volatility and how we're approaching it. And then I also write a weekly report called the Pit Report, where we break down over the course of the week a stock from a fundamental volatility chart perspective before we come up with a outlook for a trade. And that's all free. Just come to optionpit.com and click on those blogs, and you'll be a happy camper.
There you go. Click on the blogs. If they want to click on some blogs over in NASDAQ land, Kevin, where should they go? What should they do?
Yeah, it's very easy to find your way to NASDAQ resources. I work for the exchange. I help support our index options products. And I too write periodically. I have done some work more recently on the potential tax benefits associated with index options products. If you are not familiar with 1256 tax treatment and you are still awake, you can read a fascinating history about Dan Rostenkowski, pulling punches back in the 80s, but it continues to benefit folks like us on this call, or potentially benefit hedge language. So we're coming up on tax day. thinking about what products you trade in the future and why can have an impact on the bottom line when it's time to square up. And the index you choose can have an impact on how that portfolio performs. So I advocate broadly for the consideration of NASDAQ and NASDAQ 100 products.
Hey, Kevin, what are the odds that they come up with, like, they've got the mini SPX, XSP. Why isn't there is it time to bring back the MNX?
The question mark is, why aren't you aware of XND, 1/100th of the NASDAQ 100?
Oh.
There you go, sir. You've been too busy with your culinary exploits.
Yeah, too busy baking
to be familiar with these products.
So XND is a 1/100th. So it's smaller than the triple
product. It is on notional basis. It's smaller than the Qs. There is a 1/5 slice. If you're a baking fan, that's 1/5 of your big NDX cake. Ticker there is NQX. Nancy Queen.
NQX is going to be almost the exact same size as that's bigger than the triple Q. Okay.
Yes. Mm-hmm.
Yeah, it'd be nice if they would just index the triple Q, because that would create all kinds of funness. But because triple Qs are 1/40th of the NASDAQ, correct?
You are right on there, I believe.
Yes. So it'd be nice if they did that. But what was it? It's NQX is
1/5.
All right.
And XND. Look at me
NDQ?
Doing my job.
NDQ is the little one.
XND, X-ray. Nancy
XND.
Delta.
Oh, so it's like okay, just like XSP. Okay.
All right.
XND.
Yep,
I love it. I'm all over it.
Look at this.
See, doing your job out there, Kevin. I love it.
I have become a better person having had interaction with Kevin Davitt today.
Spreading the good word.
And you might have baked goods on your way. I'm going to need that address in a week or so.
Spreading the good word out there and all things vol products. That is going to do it for our baking references today. It's also going to do it for our broadcast week. For all you on-demand folks, that will conclude, like I said, our broadcast week. If you're staying around, if you're hanging out, if you're one of our pro folks, hang out for a little bit. We'll be back in a little bit. I will get the Rock Lobster together. We will talk about the mad week that was out there from an unusual options activity perspective. Checking out the chat, we've got Pry Pants in the chat saying, great turnaround on that question. He tweeted that last night. Already got an answer. You guys are the best. Thank you. We endeavor to help whenever possible. Hope all you folks out there are not just surviving, but are thriving in these markets. Again, if you have questions, hit us up. That's what we're here for. Back again on Monday for everything OB, all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VOLQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.